Welcome back, everybody. Burnsy The Realtor here, bringing you yet another helpful video to help you navigate this crazy world of real estate. This channel actually just recently broke 500 subscribers, so a quick shout out to everyone who subscribed. Your subscription, engagement, and the comments have been so meaningful to me and other viewers. With that being said, on to the video. In today's video, we're busting some common home buying myths that might be holding you or someone else back from making the leap into home ownership. Myth number one, you need a 20% down payment. Busted. A 20% down payment hasn't been required to buy a home for decades, if ever. Many home loans allow a down payment as low as just 3%, as long as you're borrowing less than the so-called conforming loan limit for the county where the home you want to buy is located. The limit for most counties is around $766,000 as of when this video was created. Although down payments of less than 20% are common, keep in mind you'll need to pay private mortgage insurance, or PMI, on a conventional loan if you put down less than 20% of the home's purchase price. Myth number two, your pre-approval rate is the rate you'll get when you close on the home. Fact. Interest rates adjust daily. The rate you're quoted when the lender pre-approves you for a mortgage is based on the current market conditions, as well as factors like your loan amount, credit score, property type, and where the home is located. Your locked-in rate may be higher or lower than your pre-approval rate, but be aware that locked-in rates can expire, so you should ask your lender how long yours will last. Myth number three, you should wait to buy a home until prices are lower. Fact. Buying a home right after a big run-up in prices may seem risky, but waiting carries risk as well. Price growth is soft for sure, but for a vast majority of areas, prices aren't likely to fall. If buyers find themselves able to find and win a home they'd like to commit to for the long run and are able to afford it, they can feel comfortable moving forward. Myth number four, buying a home is always cheaper and a better investment than renting. Believe it or not, busted. Depending on where you live, renting a home can be cheaper than buying one, and home prices don't always go up in a neat straight line. However, a home you own is an asset that can appreciate over time, provide relatively stable monthly costs, and create generational wealth. This isn't typical where I'm from in Cleveland, Ohio, where 9 times out of 10 it actually is cheaper to purchase a home over time than renting. But like many of the topics in real estate content channels, it's regional. It's going to vary from state to state, region to region, area to area. Myth number five, you should wait to find the home you want to buy before you get pre-approved for a home loan. Fact, getting pre-approved for a loan before you shop for a home is not just okay, it's smart. Once you're pre-qualified or pre-approved for a mortgage, you'll have an idea of how much money you can borrow to buy the home. Most realtors, myself included, require buyers to have a pre-approval from a reputable lender before going house shopping. We don't want to waste our time or yours shopping around and showing homes in price points that you might not be able to get pre-approved for. Myth number six, buying a fixer-upper will always save you money. Busted. True fixer-upper homes need a lot more than a fresh coat of paint. If you're looking into a fixer-upper, you should get quotes on all the repairs you're going to need beforehand. You may end up with a home you love, but you may not always save money with this strategy. And any experienced, honest general contractor or home flipper will tell you often what you get quoted is not the final price for the work. Contractors often start work and then during the work find more issues that need fixed. Costs can go up very quickly. Myth number seven, you have to get your loan from the lender who pre-approved you. Fact. A pre-approval is a great starting point for getting a mortgage, but you're not obligated to stay with that lender. You can get under contract and then shop around for a lender that makes a competitive offer and is a good fit for you. I've had multiple buyers switch lenders during the in-contract time frame as long as that lender can close at the contracted close date. You wouldn't want to switch lenders a week before closing because they likely cannot get that loan through underwriting in time. But if it's within the first few days or the first week and you have a 30-day close written into the offer, there's a good chance that that new lender with better terms can still meet that close date deadline. Myth number eight, you shouldn't buy a home until you can afford your forever home. Fact, selling a home can be costly, but if you'd wait to buy until you can afford your forever home, rather than buy a low-cost starter home, you may never buy at all. It's rare, if ever, that a first-time home buyer buys their ideal forever home. Myth number 9, a 30-year fixed-rate mortgage is always the best choice. Fact, depending on rate movements, adjustable rate mortgages, or ARMs, can save thousands of dollars of interest over the life of the loan compared with a fixed rate. Finding the right loan program and term is kind of like picking an outfit. Adjustable rate mortgages aren't a fit for everyone, but for many, they are worth considering. Talk to your lender for more information about your specific situation. Myth number 10, you can't buy a home if you have student loans. Fact, student loans can both help you or hurt your chances of buying a home. Student loans are not an automatic barrier. They're just another form of debt that's part of your DTI, or debt-to-income ratio. In fact, most buyers I've helped in the past, myself included, were still paying off student loans during their home purchase. Myth number 11, you have to pay the seller's asking price to buy a home. Fact, the seller's asking price is just around the amount the seller hopes that you'll pay, but is not necessarily the price you'll actually pay. Depending on the comparable sales in the market itself, the type of loan, the length of time the home's been sitting on the market, the competition in the current market that you're in, and the findings from the inspection report, you can start at or negotiate a better price or end up paying more than the asking price. Even in the volatility of the current market, I have closed on homes as much as $14,000 below asking and as much as $27,000 above asking. It just depends on a few key variables that an experienced realtor can help you navigate. And speaking of experienced realtors, and before I finish my list today, just a friendly reminder that if you're looking to buy, sell, relocate to, or invest in the Cleveland, Ohio real estate market, click the first link in the description of this video and click Let's Chat to get started. All right, back to the list. Myth number 12, you need excellent credit to buy a home. Busted. Many are surprised to learn that good home loans and attractive rates are accessible to individuals with less than perfect credit, not just those with excellent credit scores. This fact may be news to many borrowers, as half the surveyed loan officers identified it as the third most common misconception among prospective buyers. Who might not qualify? Individuals who consistently pay for their purchases in cash. Myth number 13, fall and winter are bad times to buy a home. Fact, spring is often referred to as the home buying season due to families' preference for moving when children are on summer break. However, this does not imply that buying during spring is a necessity or that prices will even be lower during this time. It's important to consider your individual circumstances and the market conditions when deciding the best time to buy a home. Myth number 14, you cannot buy a home if you're self-employed. Fact, you absolutely can buy a home if you're self-employed, a freelancer or a gig worker or a business owner. But the rules for getting a mortgage are a little bit different from those who receive a W-2 from an employer versus those who receive a 1099, which reports non-employee compensation. As a self-employed individual, you may need to provide more documentation of your income, like recent invoices or proof of steady earnings over time. Don't worry though, buying a home is still well within reach. Myth number 15, all lenders are the same when buying a home. Busted. About a third of loan officers in a recent survey pointed out a common misconception among borrowers, thinking all lenders are the same. While it's smart to aim for the best interest rate when buying a home, it's worth noting that lenders differ in their rates, loan opinions, and service quality. Fees can vary significantly, and some lenders are better at closing deals on time and communicating through text and email, making your home buying experience so much smoother. Did I miss any? If you're a loan officer or just a real estate geek like me, I'd love to hear from you in the comments section. I proudly reply to every comment that gets posted. So there you have it, the top 15 busted myths about home buying and the facts that busted them. As always, if you found any value in this video, please give me a thumbs up and hit the subscribe button for more great content in the future. Thanks for hanging out with me for a little bit today. This has been Living in Cleveland, Ohio, and remember, if you're looking to buy or sell in the Cleveland, Ohio market, give me a shout. I'll see you in the next video.